everyone. So this section, I think it will be big data analytics is a key to the digital business success. The financial service provider will recognize the immense potential value of the data. So right now, we will do see that how the data-driven capabilities, right? So how to employ the big data analytics thus far unleash the numerics of benefit, including faster business growth and expand opportunities. So let me invite our speakers, our panel. Yep. So so Ms. Quan Yu, the head of credit risk management and financial service group. Mr. Tana Pothikamjorn, executive vice president and the head of digital banking platform at Siam Commercial Bank. Mr. Vorapon Ponvanit, founder and CEO PeerPower. And Professor Dr. Wanpracha Caovalitwongse, Senior Director, Data Analytics Department, Bank of Thailand. So in this section, we will see that what will be the future of payment and financial service will be. What is big data so essential to drive innovation and inclusively in payment and financial services? Okay, so let me start with the first question first. The future of payment and financial services. How can we use the big data from payment service to improve or develop new financial services? So let's start with Tana first. Okay. So how Siam Commercial Bank can utilize advanced data analytic tools to provide better service to the customers? How will this affect the business models and future digital banking and financial services?
Well, the topic today is about data and how it's affecting payments. I think as we all know now, data is the new gold standard. The person who has not data in itself, but can understand data the best is the person who will understand your customers the best. And obviously, if you understand your customer the best, you can provide them with the best services. Today, we're talking about payments. So I'm going to put a couple stats up just to share a bit. I'm not sure the team will put a couple slides up to see why data is going to become quite a big thing, especially payments data. If something magically comes up, pew, maybe. Okay. A couple just interesting stats I just want to share really quickly that especially in Thailand that is quite different. So there's one metrics that Thailand sit right on top internationally, Thailand. So you take a denominator of all internet users and you see how many people of the internet users use mobile banking, Thailand sits number one. So with people who have access to internet banking, Thailand, almost all of them, so we're 74%, 3 and 4 have mobile banking, which brings me to my next quick stat that says, this is the number of mobile banking accounts in Thailand, and it's growing quite exponentially. You see right now, I just have it till the end of 2018. It sits at about 45 million accounts. You will say, hey, a lot of Thai people have multi-accounts. I have a yellow bank and a purple bank. But if you average it out, at this point, you just divide it by 2, and that's about how many unique customers who reach or have access to mobile banking, which is still sits in the 25 million, which is quite a lot of users who have access, and they are transacting a lot. This is from SCB, so these are the transactional numbers. There's still till it's the end of 2018, but in every month through our SCB Easy app, we have over 100 million financial transactions. So there is a lot of payment data being generated. The question is, how does an institution take that data and create some value of it? And the question you asked me is, how will business models change? I see it about this way in a high level. Commodities like payments, it'll be really tough to get fee revenue from it over time. And you should care about fee revenue because you're getting data, and that should to yourself be the next kind of revenue generation method is how do I make understanding and make great insights of data to sell the other financial products that actually make you money. And I think this is a good leeway to our next panelist who actually does that really, really well. So I'll throw it back up.
Okay. So yeah, so the next panelist, Miss Quan Yu, starting from a tech startup that who offer the e-commerce platform or Alibaba platform, capturing huge amount of varieties of data. Now, Ant Financial has entered into financial service businesses. So what are the recent developments at Ant Financial in using data analytics to support the development of payment and financial services? What the insight that your data can generate?
Thank you, and I'm really honored to be here. I flew from Hangzhou 2 days ago to come here to Bangkok, beautiful city. And thanks for the invitation of Bank of Thailand and for offering me this opportunity to exchange the development with my peers and the audience. So yes, on the cue of Tommy, yes. I'll kind of, it's a natural, like with payment, what you can do with financial services. But before that, let me give a real brief introduction of what is financial and what we do. So you're probably more familiar with Alibaba, which is an e-commerce platform, which enable many small merchants to sell goods online. And the mission for Alibaba and also the spin-off company of Ant Financial has never changed, which is to make doing business easier for the small businesses. We provide them the platform to sell good. And since there was difficulty for consumer and the merchant to trust each other, then we created Alipay, which is an escrow service of building trust between the seller and the buyer. So, the buyer can put the money in a third-party account, and then when he receives the good, then the fund will be transferred to the merchant. And along with that development, then Alipay spin off, and then we create this company called Ant Financial. Then upon payment, we provided additional financial services to merchants, now including which my team is specialized on is provide credit product to consumer and SMEs. So let me dive to the topic. Here I use a scene on the street of China, which I think will look very familiar to you guys as well, which is very kind of common among all the Asian countries. Like we like small shops and restaurants and even street vendors. They sell delicious foods and good to us. But one difficulty for them is banks don't usually lend to them. Because when they go to bank, they don't have much collaterals. And their data, they don't have a lot of transaction with the banks. Some of them don't even have account with banks. So in the past, they don't have much options for financial services except for borrow from relatives or even loan sharks. However, nowadays, with the Alipay, which essentially not only a payment vehicle, when you think about it, it's essentially make all the transaction record online available for us to do analytics. And with that, we're able to use that data actually to offer them credit without them to take much trouble to get the loans. So here's the scene where it's a little bit small, but if you can see there is a little blue thing, between their shaking hands, and that's the QR code for Alipay. And the customer is scanning the QR code just to pay for their breakfast. In this way, it's much easier for them to do transaction. You don't need to get cash, and you need to wash your hand. And on the back scene of that, then we see the data on what kind of commodity they sell and etc. So with that, we actually be able to, I'll see the numbers first, but quickly then dive to what behind it. With all the data we have on the e-commerce platform and also with the data of all the QR code merchants, Ant Financial and my bank, which is a joint venture of Ant Financial with other companies, were able to serve 15 million SMEs as of June 2019. And everything is online using this what called, what Jack Ma always says, 210, means it takes them 3 minutes to apply, 1 second to approve, and 0 human intervention. Actually, sometimes it's not even 3 minutes to apply. A lot of them pre-qualified for loans, so it's like 0 second to apply. And the average loan size is small. It's around $1,500. And the interest rate is really affordable. The interest rate is around 14%, sometimes even lower. The reason we're able to do that is because we are able to manage a loss rate at a quite low level, about 1%, which is comparable to the very much better quality SMEs and much lower to kind of similar industry average of 3-4%. So what's behind it? I'll be quick. So really what's behind it is big data technology, which I can tell a little bit more on the second question. But I really want to just tell a few seconds about that beautiful picture. So if you remember that payment scene and that merchant paying and consumer paying for the street vendor, what happened behind the scene is that merchant, all his collections through the payment, nothing labeled that person as someone selling breakfast, etc. He will use the account to receive personal payment as well. However, we're actually analyze the payment pattern of the over hundreds millions of accounts in Alipay, and we're able to identify who is merchant doing business, who is a consumer using an account just to consume. And this picture is a payment pattern. For individuals, we analyze that their payment pattern look a little bit like left. It's kind of you pay to person A to person B. But for merchant, the merchants usually look like a central point. There are a lot of strangers making payment to the same merchant. So that's just one tiny example of the whole analysis we do is you using this calculation actually automatically label who is a merchant, who is a consumer. And along with other models, we actually can able to identify who they are, how much they make, how stable is their business. And there are hundreds of models and credit policies behind it. I think that's will be my answer.
So how about I'm go with a startup too. PeerPower is an emerging fintech startup that currently stays at the forefront of peer-to-peer lending business in Thailand. So how do fintech firms use alternative data and analytic tools to invent new financial products and the business models like peer-to-peer lending? And what are the latest technology that you are used in PeerPower platform, or what type of data that can be used in the analytics?
Sure. Okay, thank you for that. Before going into your question, maybe give you a little bit of background about why SME credit, let's say in Thailand, right? Which I think is probably a similar picture in China, maybe even more pronounced. But as you can see here, the significance of SMEs, whether from the point of view of contribution to GDP, number of enterprises, employment, quite big. But relative to the credit received by the whole credit system is still much less than SMEs and large corporate. And if you look at that chart, it's the right-hand chart, that's only banking loans. It doesn't include bonds. It doesn't include listed credit instruments. So if you do, what happens is that SMEs representing 90+% of enterprises receive about maybe 20% of the total credit within the formal system. Not to mention the informal system, right, which they have to resort to, not unlike in China. And I guess you've seen probably this chart before. There is a channel opportunity based on the high internet and mobile penetration. And the fact is that Thailand, in addition to being big mobile banking users, we're also big Facebook, Instagram, and social media users, right? Spending a lot of time there. Only outpaced really by the Philippines. Regulatory framework won't go into too much, but in Thailand, we're subject to 2 frameworks. One under the SEC, which is for business borrowers, meaning registered business owners. For small business owners who are unregistered, would be under the Bank of Thailand, under the P2P lending framework. Now, getting into your question, one thing which, at least from my observation and having done this business for a couple of years now, is that we're really shifting away from, just matchmaker platforms, right? In the traditional sense would be things like Lending Club, SOPA, for example, which purely matches borrowers to investors. Whereas really shifting more towards what I call an integrated system enabler. And what that means is that, not unlike, I actually have your logo, Ant Financial there. I'm sorry, I'm borrowing it. But basically, like Ant Financial is a good example. I mean, they themselves, they're a very, capable data analytics provider, but they partner within their other sister companies, let's say in the ecosystem. Alibaba, for example, my bank, but even more, right? Because all the merchant partners, everything else, where data flows in real time. Again, not unlike, Grab, Line, etc. And some of the bankers here are probably much more familiar with this on those initiatives. So based on that, really the experience of the borrowers and investors can be improved as we think about being more of integrated enabler rather than just being, a standalone matchmaker, right? And from the borrower's benefits, similar to what Quan was saying, which is, the quick application process, enabling the borrowers to get better rates, for example. And for investors, obviously a new asset class, enabling them to gain more benefits in terms of diversification, returns, etc. And obviously more data points are better. That gives you better credit risk assessments. For us, this is a pretty busy slide, but ultimately, this gets to your first question about what data sources. So we use what we call both traditional and non-traditional data sources. Traditional would be things like financial statements, credit history from the NCB, etc. And the more untraditional, non-traditional sources would be transactional data. Like, for example, from e-commerce platform partners, that would be one thing. Things that we collect, let's say on our business site visits, about their psychometrics, the inventory levels, etc., including understanding that SMEs and small business owners, that's a very thin line separating the two, meaning that's a lot of mixing of wallets. So actually, the ability on the right-hand side to look at transaction flows from both a personal and business level and have an algorithm which not only detects fraud, but also to understand and estimate the appropriate level of cash flows relative to that payment capacity, that gives you a little bit more faith in terms of the credit model, right? But with credit models, I suppose the 1% NPL is very impressive, but ultimately, it's about increasing the probability of collection. Nothing is 0% risk, right? But what do you do to reduce that risk? And part of it is getting information really from all your different partners that you can, where you're not only doing data scraping by yourself, right? The data marts are in different aspects, different pools. One day, when the open banking, and I know you talk about PSD2, but when open banking becomes a reality, that's where actually banks themselves will be at the center of that, with Fintech players and other platform players being enablers and serving different segments of the market better. And I think I'll end there.
So let's go to Dr. Wanpracha. Data analytics in the central bank views and the role of big data on regulation and policy making. What is the recent adoption at central banks in the area of data analytics to strengthen the factors and the policymaker and regulator? Please give us some example from the current work of BOT and how the big data and analytics become the main driver for risk management, fraud protection, and economic development in the broader perspective.
All right, thank you. I'll answer the first question first. So if you go to these slides, it doesn't come up right, but that's all right. So there are 3 pillars at BOT. That's what we believe in data analytics. Okay. The truth is, our governor has the crystal ball. Well, it's built on data set, like Jim said, lots and lots of data. If data is like our vital signs, for us to be able to diagnose the economic condition of our country, so we need lots of the data. And then we need analytics tools, so we need all kind of machine learning, AI, automated deep learning, whatnot, all of those. And we need to have business cores because our problem, like you know, I don't have to introduce BOT, our problem is very different from Ant Financial, SCB, or PeerPower for that matter. We're interested in stability of our economic conditions. So first thing first, what we try to do is to integrate all the data silos. Okay, so most of the data that we have at BOT, we receive them by being a regulator. We receive them from partnerships and so on and so forth. The question is, we have all of these data, lots and lots of data, but we need to be able to link them. The interlinkage between these data are so important because if you have, imagine vital signs of me, Jim, or Dr. Thuntee, and how do you know? How do you link them? Because they're different people, right? Unlike Ant Financial or PeerPower, you know exactly who you're looking for. In our case, in order to link different sectors, as you can see how heterogeneous people are in each individual sectors. So we're trying our best to first integrate all the data silos to be able to integrate them. At least we can infer them. And the second step is to look at analytics tools. And the tools that we use at Bank of Thailand are no different from many others that being used in the industry. So we start from network and visualization. Like and financial show is a network of payment. But imagine we have more than just payment. We have a network of who borrowing money, who paying money, who's the exporter, who doing the FX transaction. And imagine all of these connectivity that we have to build. The second one is machine learning. How can we better score risks? Okay, so even though we have more data, right? We have loan. Let's say company A has a loan activity with the bank 1. We also see that with bank 2, but we don't have the details of each individual bank as much as the bank itself, but we see a broader picture. Hopefully, we can have a better risk score. And the third one is text analytics and natural language processing. Hopefully we can try to make sense of unstructured data. I believe, this is my personal belief, that machine learning has been somewhat mature in terms of structured data. The data that comes in a table, come in a form that is readily available, can be used. But the data like text, especially Thai language, which is much more difficult than other language because we don't have space and so on and so forth. And the last area is the AI and automation. We're trying to use AI and automation to help process the data. Imagine how much data we received from the bank, from financial institution, from our partners, from among others that we have from the government as well. So we have to process those data. We have to link those data. Sometimes Bank A would input the name of company A in Thai. Bank B might input it in English. So imagine how we have to match if we want to be able to make sense of the big picture of what's going on. So to answer your second question, what have we done with those data and the tools that we have at BOT? We can focus on 4 things. One is financial market, right? So we use data and data analytics tools that we have to increase effectiveness and efficiency in FX supervision. So we can see the big network. You could imagine all the interlinkage that Ant Financial has, but we have all the onshore FX transaction. We don't know the offshore. How can we regulate? How can we provision what's going on with the Thai baht currency? That's extremely difficult. What we can do is we can build a network of onshore what we see, or the FX transaction that being done at the bank, at the money transfer or money changer, we can only infer to what's going on in the offshore. So we can understand how much of the pressure of Thai baht is being receiving right now. Another thing that we do is we hope that we can enhance risk management for exporter. For example, we receive data from about imports and export. So we know how much of leverage each individual exporter has. And we know the transaction that that exporter is doing with the bank in terms of FX. So if those if the exporter do a lot of forward transaction, then you know that they already have made the protection built in. But then if the person doesn't really have any forward, they just do the current swap. So they will be at risk of the currency swing. So we can actually help mitigate the risk. We can encourage them to do a lot, there's a lot of instrument in FX market and help them hedge the risk of the currency. And then we can look at, we can help identify suspicious activity in FX network, how much of the pressure we have, just like we saw in the news last week or week before. In terms of banking supervision, what we try to do is we try to use text analytics and NLP to promote quantitative analysis of behavioral and culture at financial institutions. A lot of time when you read the text, it's very much qualitative. So you want to be able to make an objective sense of what's going on at the bank so that we can regulate them, we can supervise them in the right fashion. Another issues that we worked on, increased effectiveness of ongoing supervision. We can use machine learning to analyze financial transaction data. The reason that we can do this is because we have transaction across banks, so hopefully our model will be a little bit better, so we can see a bigger picture. And we look at each individual, but of course we don't care about each individual. Rather, we would use bottom-up approach to look at vulnerable sectors that we should target, or vulnerable companies or vulnerable portfolios who's at risk of having lower credit score. Another area is monetary policies. Even though we have, Bank of Thailand has a lot of tools in our bag, but early diagnosis of economic condition would be best. So imagine if you're sick, early diagnosis is the best. So we also use data, especially alternative data, that can be timely, and we use data analytics tools to build new leading indicators. For example, we have data, electricity data. We use it to monitor real estate condition, especially condominium that we see around Bangkok. Hopefully, we can see how much of the bubble is out there in the market. We look at activities of how much people import goods and try to predict how much of the export will do. So you can imagine if we have value chain in the whole supply chain process, we can see how much of the export going to be increasing or decreasing. The last one, we look at social security data. We can at least get a better estimation of what's going on in the job market, and hopefully we can see economic developments. For example, if we see companies popping up in the social security data set, companies start growing their employees, for example, SME, so that could be a good indicators of GIM credit score, if you will. If some company keep hiring more, right, we see more employees in the data set, that could be useful. Like I said, we also use it for internal excellence. We automated data processing using semi-AI to help GFMIS processing data to put government spending into the right category. We can help process financial survey by the IMF. So these are the things that we use. As you can see, we have different objectives from other players in the market. But having said that, we all have the same goal. We want financial institutions to be healthy, so our economy can be healthy. So I hope I answer your question.
Okay, so we'll go to the next one. The data-driven insight generated by analytic solutions has been an important tool to drive growth and increase business opportunity. Let me go with Khun Tana first this time. How important are the customer insights and the personalization in the financial industry? Do they play a huge role in driving brand loyalty and attract the new customers? And how predictive analytics will transform the financial industry in the future? And how should financial service provider respond to this change? Financial sector is a heavy regulated activity. How can you show the regulators that your analytics model reflect the actual insights?
So many questions. I need some data analytic model to help me memorize, right? But I believe the first question is around
The
importance. Of course, it's important. We're sitting here today talking about it, so of course it's important. But I put it this way again. It's important because context and relevance is what will make you the closest to your customers. Because without context or relevance, let me start off. As a banker, a lot of bankers here, if you see a customer with no context at all, what do you want to do with that customer? Usually the answer will be, I want to sell him or her insurance, right? Because that's the highest margin product I can get. But he or she probably at that moment does not want insurance at all. But that's without context and without relevance. So in a sense, if we understand customers well, we can keep them closer, right? And if we keep them closer, we could even understand them more. I'll give you a totally non-financial example. My friend in the media industry, very close friend, told me like he was studying into why all these short video clips are being watched so much. And in the end, they found out this thing that you guys will know it because all you guys do this at all, but in Facebook and in Instagram, when you start watching a clip, you open it up, and it becomes this black screen, and you have a clip. I call it the clip black hole because it's already black. You watch it, you'll put another clip right below it. You flip up, and there'll be another relevant clip below it. Flip up, and you can spend hours and hours. And the next time you know you've watched 285 clips about shoes or about whatever you like, but it's very relevant because they're trying to keep you there the longest you want to be. And you know that, right? And Facebook and Instagram does this so well. You could be stuck watching stupid videos all day long. But in the end, it's because they understand you. You start watching some sad Korean drama short clips, they'll keep giving you that dramatic video clips again and again and again, and you're stuck there until it's time to sleep. And it's the day is gone, right? But that's kind of the matter of fact of people who understand you really well. If you ask, does the bank understand you that well? We want to, not so much yet, we're trying to. I'll give you some examples of what we do. You ask me how it would transform the financial industry. I don't have the answer. Maybe she does, I think she does, but I'll at least show you some of the things we do at SCB, right? If you open up your SCB mobile app, and if you don't have it, you really should get it. It's really good. We will try to predict what transaction you're doing. We'll just put it up 3 of them because we think you don't have to key in the stuff and we think we can predict what you're trying to do. And actually, we predict at about a 70% accuracy rate because you guys just do the same transactions again and again, right? So it's at the end of the month, you're always transferring it for your rent or whatnot. So we'll pop it up and we'll actually improve it over time. But at this time, the hit rate is 70%, which you feel is actually understanding the customers so they don't have to go through and click through a lot of buttons and making their services a little bit more streamlined, right? Next one. This one is in the works, coming out soon. We asked all our customers, and all of them say, I want to save more. I need to save. And then we just look at their behaviors, and none of them save. Which is true. And then we ask them why. I don't know. I'm too lazy and this and that. So you know what? If you understand that customer really well already anyways, and you know that he or she will not be using, let's say, she has 5,000 baht left. I know 2,000 baht will not be touched because I understand her behaviors and her spending patterns. Then might as well just help her automatically save that 2,000 baht into a high interest fixed account or a low risk mutual fund. And we want to do that automatically because the minute we let them do it themselves, they don't do it. And then that's the insight we have found. So how do we get insights to actually help customers reach their financial goals? That's coming up. This one has been out for a bit, but obviously with investments, these guys talk about it a lot. We can understand the risk profile pretty easily from the data. But if we understand that risk profile, why can we not just recommend them a profile of products that they should hold, investment products, mutual fund stocks, or even just find a product that is very relevant to them. If you look at our Easy Invest kind of products, we have a series of kind of robo-advisory and actually robo-traded funds that we actually offer to our clients. And finally, this is the big one within banking, and it's the one that everybody cares about. I'm not going to talk about it too deeply because our moderators have talked about, but lending will be the next big one because we have always done lending on a very basic calculation and understanding of our customers. So just say, haha, income of X, then we can just give out that much, and the risk is all around income. But we can understand a customer so much more than their income, right? And we have, but I mean, these people have done deep analytics. You see that complex graph that Ant Financial put up. I do simple stuff, but at least some of the things we can actually understand. I'll share you one funny one that we looked. We actually start looking into kind of mobile phone data to see the correlation with risk, right? And even simple things like, you have a lot of missed calls, you're highly correlated to not pay your loan back. Who has a lot of missed calls? But no, I didn't say it's correlation is not causation, but correlation is correlation. And there is so many signals out there beyond just one income number that tells you that whether a customer is risk-worthy or not. And these are kind of the things that we're trying to get data to work around. So these are just some of the many things we're trying to do. At SCB may sound a bit simplistic, but we're trying to get deeper and deeper down to these things. And not to take too much time, last you say, it's heavily regulated. What do we want regulators to do? I'm not asking much from a regulator. I think in Thailand, I think they're really helpful. But at least the hard part where I think from a regulator's hat is when we use a lot of analytics, we use a lot of things we call machine learning. What happens is we don't understand the input, but we understand the output is better, meaning it keeps changing. Because our regulatory framework is usually rule-based. So it says, is a customer is over 18, does not have more than 3 loans from institution, and this and that logic, then we can give them a loan. But in a world of analytics and risk adjustment, those factors become blurred. We don't know either. A machine is keeping changing it all the time. So it has to be around principle-based regulation where we want to maintain social NPL in the economy beyond a certain, below a certain limit. And the regulatory framework probably needs to adjust a bit, and I'm sure that's a hard thing to put together because I don't even understand it deeply ourselves, but I think that's how we innovate going forward. So I'll stop there and not talk too much.
Thank you. So let me go to Ms. Kun Yu. As a big tech firm, which emerging technology do you see as a game changer for data analytics? Can you give some use cases of the data analytics solutions that generate data-driven insights for improving customer experience and driving business growth? How do you ensure that the efficiency and accuracy of your analytic model, and with regard to financial vision and strategies, how a financial ecosystem will look like in the future?
Thank you. Again, a lot of questions. I actually will use that consistent example to illustrate all the questions you asked. If you remember that beautiful two white pictures there, how we identify who is the individual, who is selling goods on the street. If you think about it, about the technology behind it, so for Alipay account, it looks easy, right? If you give you a pattern and ask you to guess, you can make that easy guess. But if you think about it, Alipay has over 700 million accounts. And everyone make about a few dozen transactions each day. That's the web of 700 million dots with all the connections between them. And so you can imagine what's the storage and computing power you need to process those data. So I think all the recent development in China, in US, and the world is all this cloud computing. That computing power, I think, is the foundation for everything to happen. Because I think AI, all this, AI is not a new thing, actually. It started in the 50s, 70s. But it only has more real-world utilization recently because in the past, no computer can leverage those algorithms. And I also tell my team that AI, machine learning sounds fancy. it's nothing but, bank has all the income, traditional who you are, and income data. You don't need AI and all that, right? It's all gold. You make gold into another gold. But AI is more, and big data or unstructured data, you're like in digging gold from like sand. So you need a lot of computing power to process those data. And finally, from that 700 dots and all these connections, you identify, there are 10 million actually merchants among the 700 dots there. So I think cloud computing is what enabled the rapid growth of a lot of things you see today. And AI, I think that's technology. Let's also make customer experience better. If you think about, again, using the consumer experience or the small SME experience, what we found from, again, that street vendor, they don't do accounting. If you gave them like a huge loan at the beginning of the year and expecting them to manage that throughout the year and make sure they pay you in the end, it probably will be a failure. But the habit is they count their income at the end of the day, how much I make, how much I need to kind of buy more inventory tomorrow. So it fits our loan actually to their seasonality, to their daily income. And we even gave them a small incentive. Once they make a lot of receivables, they will send a message, because you're making consistent payment, we increase your line a little bit today. Great job. We actually do line increasing every 10 days, every day to them. So that's actually making them feel some achievement. That's all about what's the data, that's code thing behind the scene, but just make the consumer, the small business feel better doing their business. The future of, I think what changing is we're actually becoming more and more open. We're already an ecosystem, right? We have merchants on our platform. We have the e-commerce platform. But nowadays, we work with banks a lot, because at the end of the day, we don't think we'll do all for the 700 million accounts. We don't think we're the one who provide and satisfy all their financial need, even just credit need. I think some lending, they should belong to the bank, like house loans, even car loans, or even high line cash loans. That's probably bank should do it, or we should do some joint work with the bank. So we're actually thinking with this consumer base, there are lots of opportunities for us to work together, actually leverage our strengths and serving them better. So that's what I see kind of coming on a more open collaboration. That's actually the scene of the collaboration for the future of finance. We want to do it, and also we have to do it. There's no way we can serve all the need of 700 million accounts.
So let me go to Kun Vorapon. How do fintech firms capture opportunities of big data? Or is there any obstacle from fintech to make the most of data in developing business models and financial service solutions to be better serve the customers? What do you need the most to make your platform efficient and foster inclusive financial services?
Okay. I think starting with the first question, the obstacles, I think starting from being a fintech firm, if you're a startup, if you're small, is obviously the amount and the velocity of data that you can get, right? The tools are already out there. If you have the tools, you have the right people to apply the tools. The rest is getting the data. So that's the main obstacle as a startup, as a fintech. For us, the way we try to overcome that is, again, going into what Quan was saying about collaboration, right? Linking up with partners. Banks is an obvious one for fintechs, for sure. But I think alternative data sources, insurance companies, for example, mobile telephone companies, for example, e-commerce platform, for examples. The reason I think these, including banks and these other players, are keen or at least interested to explore is because of the multidimensionality of people and organizations, right? You can have a bank account with one bank, but that's only a very small slice of your part. The other part is you're using mobile phones with this particular company. you're buying insurance from another particular company, you do supply chain financing with, let's say, PeerPower, for example. So in that aspect, if you're capturing that overlap and you can contribute value to, let's say, the data ecosystem, that's actually what makes it, take it to the next level. Because otherwise, nobody will want to partner with anybody, with us or with anybody, if there are no mutual benefits, for example, right? Mutual benefits can be as simple as fee sharing. I mean, that's the most simple one. That's what most people ask for. But it's more. It's about data exchange. It's about real-time tracking of, what the consumer, what the business borrower is doing, such that at the appropriate time, you can give them an increase in credit line. At the appropriate time, you may tighten your, credit lending practices based on the different leading indicators. That's the other thing where the big data has big opportunities. It's not only, I think, about the specific microcosm of your customers, but also the ability to track leading indicators which are not only affecting your business, but the periphery of your ecosystem partners, for example.
So, Dr. Wanpracha, as the central banks normally have data from financial institutions, payment service providers, real sector, and economic activities, what are the insights generated from this data that will benefit the whole economy? How do you see opportunities and challenge for central bank's data analytics team?
Okay, first, I think the first question is, we have a lot of data. Like I mentioned earlier, the data come in different forms. They come at different granular level. For example, from the bank, right, we have the loan account. From the payment, we only have a template-based data, like summary, statistics. We don't have each individual transactions. So imagine linking the micro with the macro data, that can be difficult. We try to make sense from what we have. We can only interpolate. Hopefully, we can build a system where we can see a big picture. We can look at the sector level, location level. So those are the granular level that we can look at. So coming to the challenges and opportunities, it would be great. Like we all keep talking about having more and more data. The data should be at the same level of granularity that they can actually be linked. And then Mr. Quan also said we need the infrastructure to be able to process those data. So we need more data. At the same time, we need infrastructure to be able to support the data that's coming in, to be able to link. Right? For example, if you want to do peer-to-peer lending, let's say if you have open banking, you have to be able to draw the data, get the query data from different parties, how you merge them, how you can query them. That's the next question. Right? The next challenge is data analytics model or machine learning models. People change their behavior every day, right? So the model that works today might not work 3 months from now. So that's come the AI that you need to adapt the model. For example, in payment area, you have a lot of payments, so you have more data to build your model. But in terms of Bank of Thailand, how many financial crises do we have to build the model upon? That's probably going to be a big, big problem. But again, to predicting what's the next payment going to be, I don't think it's hard, I'm sure. but again, it's predicting the financial crisis is probably going to be harder. I hope you agree with that. So thank you.
Okay, so we pretty much almost run out of time. So the last question is very interesting question. The impact of PSD2 on the financial sector and open banking concept, as well as security and data privacy law, personal data protection. Let me go with Kun Tana. What the extent will PSD2 and open banking concept have an impact on the financial sector? Why open banking is going to be the next big thing for payments? And as a customers, what should I be aware of how the data is used by the commercial bank?
We don't have much time, so I'm going to keep it quick. I'll have just 2 points. I'm not going to go to PSD2, but open banking. Let me put it this way. Open banking will allow kind of the services from the financial industry to be connected all across the different services that we use. Because banking is a means to an end. You don't wake up and say, "Whoo, I want to pay a bill today," right? You just want to go eat, you want to spend time with your friends, you want to fly out for your vacation. There's some banking financial thing that needs to happen at the back. So I think looking forward in the future, if you can connect all those kind of services you want to do with the financial part, things can be automated. So I believe in the world in the future, you really don't really see banking very clearly. It just hides behind it, and something needs to be done. It'll be done in the best way that needs to be. But that's very future looking, but at least I believe so. Second point I'll make is what do you need to be aware of on data? And I will emphasize on this for all of us here. Who has used Face app just to find out what you look like 20 years down the road? You know, you're sharing your face with some Russian developers, right? But the point is, there is so many ways you can share data to people today. And in Thailand, I believe through research, nobody cares, so you just click share. But just mind two things. What are you sharing and who is taking your data? And just be mindful of that all the time. And I think that's important for everyone. Not if you just open up Facebook and see love horoscopes. ผมจะได้เป็นแฟนกับ oh, I click share เลย right? So no, I mean, just be a bit wary about where your data is going, because in going forward, I think that's kind of one of your most valuable assets. I'll stop there, yeah.
Dr. Wanpracha, from the regulator's point of view, could you advise on data governance, like policy or framework to prevent misuse of data or negative impacts on customers, particularly in the more interconnected environment?
I can only share my personal perspective. I don't think I'm allowed to share from the bank's perspective. I think it's a good thing. Open banking is a good thing. I think it's pro-competition policy, right? Imagine we have ATM, right? We all use ATM before, right? For 20 years, we've been able to withdraw the money when we bank with different banks. What's the difference from before, right? The only information that was shared was your balance, that you have enough money. But now you're going to share something a little bit more. So it's a good thing. It's convenient for you. It's good for the customer. But you want to make sure it's safe, right? So it's no longer just the balance, but it's your financial transaction that you're sharing. It's your personal information you're sharing. So it has to be safe enough. So from my personal point of view, is as long as the security is there, could be three-way authentication as opposed to two-way, then that might be a good thing. As long as a customer can be ensured that the process is being done with cautions, and that I think that's what we would care about from BOT point of view.
Ms. Quan, what's your take on the relationship between fintech companies and the bank in the future? Will the former replace the latter? Or how data analytics can be used to enhance cybersecurity, especially in the e-commerce platform? And what you take on the relationship between fintech companies and bank in the future? Will the former replace the latter?
Thank you. I'll be, again, efficient, probably using one example to answer all three questions. So I don't think we'll replace banks, not just to please the regulators and my bank colleagues here. It's happening because nowadays, over half of our assets actually are joint lending with banks. We work with more than 300 banks to do the lending. So that's happening, not just, we expand our books larger and larger and just get their cake smaller. So why it's happening? I use example of what we work with the Bank of Guilin, which is kind of, all of their customers are farmers. So they actually have a lot of data of them, their savings, they use their open account. However, they're troubled with one thing is the fraud. Most of the customers are good, but a few of them, are fraudulent account. But which is actually the strength of us. Remember again that beautiful web I showed you. I think fraud is especially now they go digital as well. And if you are not quick in minutes, seconds, they can get the money and run away and to nowhere. So because we have all the computing and lots of the payment information in real time, we also have fraud models actually automatically update itself online, with a new feed. So we're better at kind of detecting where fraud is happen, and also tell them, stop this payment, this is a fraudulent account. But they have their saving, they're able to judge, I gave 20, 30,000 to this farmer. So with the joint collaboration between us and that bank, we're actually able to serve a lot more farmers at a lower rate. So I don't think we're replacing each other. What's the last? I think there's a last question. No, I think there will just be more collaboration. Probably not just us and banks, probably even us, we all sit there. We each have our own strengths, our own channel. I think there will be a more open and collaboration ecosystem in the future. Thank you.
So, Kun Vorapon, how should fintech firms and platforms that connect directly with the customers prepare for the customer education and awareness regarding to personal data protection and benefit arising from better customer experiences? What are the impacts on fintech firms regarding open banking approach and personal data protection?
The first one is easy because you know that Thailand just passed a law on personal data privacy protection. So anybody that operates in a regulated environment will just have to comply with that, which I understand is based on GDPR standards from Europe. So if you don't comply now, you have to comply in the future anyway. And from, I think, the operator's point of view, again, coming from being a startup and actually operating in the areas of credit, which is normally the playing field of banks, finance companies, big tech players, you're trying to create trust, right? Building it from a very small base. In order to do that, you have to be transparent. And you have to be able to show that you have the customer's best interest at heart. So in that sense, related to your sort of second question is, you're really trying to educate the customers as well about what data, what the data is being used for, how you're using that data. But only when they have trust in you, are you then able to collaborate with other ecosystem partners, to have these types of data partnerships. Because if your customer doesn't trust you to give you consent with that data, then you're almost useless as a data counterparty in a data ecosystem. So in that sense, it's not only required by law, but I think it's also in the self-interest of fintechs. And I think for open banking, same approach, more sort of collaboration. And yeah, I would really love to see the day when we actually do have open banking here, which would be kind of cool because that would then actually place the banks in an almost different light, right? Because right now, you look at banks, what do you evaluate banks on? Their balance sheet, yeah? Their tier 1 capital ratio, yeah? In the future, what will you evaluate banks on PSD2? I don't know, how many lines of data, How many terabytes of data? How many data points per individual? 5,000, 10,000, 80,000. So, it's interesting, yeah.
Okay, so before we end this section, let me go with a short key takeaway from each of our speakers, like how data analytics will shape the future of payment and financial services. Let me go with backward. Kun Vorapon first.
Well, for me, to be consistent with I think all the panelists here, collaboration definitely here to stay. And in the future, all collaborations will involve some form of data, which is, the raw information, or analytics, right, which is the business insight, or customer relationships. So, big data in the future, I suppose we won't have to be asking that question because everybody will have the requisite tools, and the rest is about what insight you can generate. But even with the insight generated is what then do you do with that insight? I think that's the new competitive arena. The insight itself, unless you can act quickly on it, you can do A/B testing on it, you can actually start seeing the customer response and loss rates on those insights, and then iterate into the next round, iterate into sort of the next product. So that's where I think the opportunities come, really, is the ability to drive that.
Dr. Wanpracha?
I think from customer standpoint, I like open banking. I think the more data we have, the better. I think the more data, when we can better model the risk, so we know the risk better. But data sharing has to be done right. So with the right access, the right policy, and the right mitigation of risk, cybersecurity, and whatnot, I think that should be what on the top of the list.
Ms. Quan, please give me a short takeaway.
Sure. I think my get from this session is I think people label banks, fintechs, et cetera, or central banks. But you can see from today, actually, everybody is tech. I'm really excited to see in the future how this data technology and all this tech can make things better and people's living better and small businesses do their business better. So.
And Tana.
Last one. Well, my key takeaway, we know your customers, understand their emotions and need, or else someone else is gonna take them. And the same statement can be applied to your significant other. It's very simple, right? That's it. We're done.
Okay, so as we see all our experts from different areas, and we can see that the data-driven and the data this day is very, very important from starting from strategic direction, the very high level, to the technology, and we can see a lot of business cases very useful in here. So we living in the data world. So thank you very much.